Welcome to the Explainer. So right now, the Dogecoin market is sending some seriously mixed signals. I mean, you've got these huge players dumping coins, but at the same time, a flood of bets that the price is gonna go up. So what's the real story here?
All right, let's get right into the thick of it. In just the last 5 days, some major Dogecoin holders, we call them whales, have sold off a massive amount of Doge. We're talking 150 million coins. That's a huge move, and it's definitely making waves. And that brings up the million-dollar question, right? Is this a sign that Dogecoin is doomed? Should everyone be heading for the exits? Or is there something else going on under the surface that we're not seeing? So here's how we're going to break it all down. First, we'll look at what those whales are doing. Then, we'll check out this weird split in the market. After that, we'll dive into the charts to see the technical battle. And finally, we'll try to figure out if a comeback is really possible.
Okay, first up, let's talk about these big sellers and try to figure out what their moves are really telling us about the health of the market. Now, what's really interesting here is when these whales decided to sell. See, they're not cashing out at an all-time high. No, they're selling while the price is already low. And that sends a totally different message. It screams caution. It's like they're trying to reduce risk. And that action alone is kind of holding the price down like an anchor.
But wait, that's just one side of the story. Now let's look at a completely different part of the market, the derivatives market. And believe me, what's happening there paints a totally opposite picture.
This is where you can really see the market's split personality. You've got the whales, the big holders, playing it safe and selling off their actual coins. But then you've got this other group, the derivatives traders, who are going all in, making these highly leveraged bets that the price is about to shoot for the moon. It's a total divide. And I mean, just look at the numbers coming out of Binance. Over 70%, yeah, 70, of traders with open positions are long. That just means they're betting the price is going to go up. The ratio of longs to shorts is almost 2.4 to 1. That's a lot of people feeling very optimistic.
And we're not just talking about wishful thinking. There is serious cash behind these bets. The total value of all these contracts, what we call open interest, has climbed to almost $1.5 billion. Think about that for a second. While the price is dropping, more and more money is flooding in, betting on a huge reversal. Now, here's the catch, and it's a big one. All this open interest, it's not necessarily a good thing. Because it's happening while the price is weak, it really means one thing: leverage. Traders are borrowing to make bigger and bigger bets, hoping they've timed the bottom perfectly. But this makes the whole market super fragile. It's like a house of cards. If that recovery doesn't happen fast, a lot of those positions could get wiped out in a flash.
So this all leads us to the chart, the actual battleground where these two sides, the cautious whales and the super bullish traders, are duking it out. If you look at the price action, Dogecoin has been stuck in this, well, it's called a downward channel. Basically for months, since October, it's just been making lower highs and lower lows, a classic clear downtrend. But if you look a little closer, you start to see some interesting signs. The price seems to be hitting a wall, or maybe a floor, right around 12 cents. It just doesn't want to go any lower. And at the same time, an indicator called the RSI, which measures momentum, is starting to level off. It's like the sellers are getting tired. They might be running out of gas.
And get this is the really weird part. Even though we're in a downtrend, it's the bears, the people betting the price will go down, who are getting wrecked. In the last day, almost 70 grand in short positions got liquidated, compared to only about 5 grand in longs. That means even these tiny little bounces are enough to wipe out the sellers. It's another huge clue that the bears are starting to lose their grip.
Okay, so let's take a step back. We've got whales selling, but traders are super bullish. The chart is in a downtrend, but the selling pressure seems to be fading. So what gives? Can Dogecoin actually pull off a comeback from here? So let's just lay it all out, right? It's a real tug of war. In one corner, you've got the bears. The whales are selling, and the price is technically in a downtrend. But in the other corner, you have the bulls. The traders are optimistic, the price is holding a key support level, the selling is slowing down, and short sellers are getting punished. It's a real standoff. So, where does that leave us? Well, when you weigh all the evidence, it seems like despite that scary headline about whales selling, the market is actually showing more signs of finding a bottom than it is of collapsing. It really looks like the sellers are just exhausted, and that could be setting the stage for a real recovery. And if,
and it's a big if, but if Doge can hold this line and break out of that downward trend, the next major target everyone's going to be watching is that 25-cent mark. So that leaves us with the final nail-biting question. The sellers look tapped out, that's true. But with all that borrowed money, all that leverage piled up on the bullish side, the market is basically a powder keg. So, is the path to 25 cents clear, or is all that optimism about to go up in smoke? Hey, if this breakdown helped you get a better picture of what's going on, do us a huge favor. Hit that like button, share this with your friends, and make sure you subscribe to Crypto Explorer 24/7. We do deep dives like this all the time. Thanks for watching.
All right, so when a blockchain gets hacked, it's always a mad dash to fix the damage, right? But what happens when the fix is actually worse than the hack itself? Well, that is the exact mess the Flow blockchain just found itself in. And let me tell you, it kicked off a crisis of trust that was about way more than just stolen money.
And it all starts with this number right here, $3.9 million. That is the crazy amount of money an attacker basically printed out of thin air. And it set off an absolute firestorm inside the Flow ecosystem.
So here's what we're going to cover. First, we'll get into the exploit itself. Then we'll look at Flow's pretty wild plan to hit a giant undo button. After that, we'll see why their own partners freaked out and pushed back. We'll compare the two different ways they could have fixed this, talk about how regular folks got caught in the crossfire, and finally, get into the huge crisis of trust this whole thing created.
Okay, let's dive right in. First up, the exploit. How in the world did someone pull off a multi-million-dollar heist on a major blockchain like Flow? So this all happened on December 27th. An attacker found this really critical vulnerability deep inside Flow's execution layer. Now, what you gotta understand is, this wasn't your typical smart contract bug. Nope, this was a core problem with the chain itself, and it let the hacker literally create money out of thin air. Minting Flow's own token, plus other stuff like wrapped Bitcoin and wrapped Ether. The very next day, the Flow Foundation had to come out and confirm it, and you better believe the market did not take that news well.
Okay, so millions of dollars are gone. The pressure is on Flow to do something and do it fast. And their solution? Well, it was bold, it was decisive, and it immediately threw them into a whole new crisis.
Their big idea was something called a blockchain rollback. And we need to be super clear about what this is. Imagine you have a remote control for the entire network, and you just hit the rewind button. That's a rollback. Every single transaction, every single interaction, poof, it's all just erased, like it never even happened.
So yeah, the Flow Foundation's plan was to turn back time to a point before the hack ever happened. But here's the kicker, and this is so important. This wouldn't just erase the hacker's transactions. It would wipe out every single legitimate transaction from every innocent person in business that used the network during that time.
And that decision, which they apparently made all by themselves, it led to an immediate, and I mean fierce backlash from the exact partners that Flow needs to even operate.
I mean, just listen to this quote from Alex Smirnov. He's the co-founder of a huge cross-chain bridge called DOGE. He said he literally woke up to the news, just like the rest of us. The very chain his entire business is built on was about to be rewound. And get this, Flow was telling people they were working with their critical partners, but guys like DOGE were totally in the dark, not a single phone call.
So the pushback was, completely understandable. First off, not even talking to your partners? That's a massive trust issue. But it was also a huge technical risk. Think about it. Cross-chain bridges need a stable, consistent history to work. A rollback could have caused absolute chaos for them. And it wasn't just the bridges. Major crypto exchanges came out and said they hadn't been contacted either. It created total confusion. Should they stop deposits? Stop withdrawals? Nobody knew.
Now, in the face of all this, the partners didn't just complain. They actually came up with a different plan. And this really sets up a classic debate in the crypto world. Do you use a sledgehammer and just rewind history, or do you use a scalpel and try to fix the problem surgically?
And when you put the two plans side by side, the difference is just stark. Flow's rollback, it was a blunt instrument, just erase everything and everyone in that time window. But the partners, like DOGE and Layer 0, they suggested a hard fork instead. This is way more surgical. You just patch the bug so it can't happen again, and you blacklist the hacker's wallet so they can't move the stolen money. And the most important part? It leaves everyone else's transactions alone. History is preserved.
And this really gets to the heart of why everyone was so against the rollback: the collateral damage. This wasn't just some abstract technical debate. This decision was going to have real, painful financial consequences for a lot of innocent people.
Yeah, The critics' main point was simple, but it was absolutely devastating. A rollback would punish the wrong people. Think about it. The hacker? They probably already moved the money off the Flow blockchain using one of those bridges. So erasing Flow's history doesn't even hurt them. Instead, all the pain goes to the regular folks, the liquidity providers, and all the other partners who are just doing normal, legitimate business.
And the market's reaction to all this? Well, it was brutal. The price of the Flow token just collapsed. It dropped by more than 40%. It went from about 17 cents all the way down to less than 8 cents. And that wasn't just because of the hack. That was the market screaming that it had zero confidence in how this crisis was being handled.
Losing all that money was bad, for sure, but the real damage here went so much deeper. It struck right at the heart of the entire idea of what a blockchain is even supposed to be.
So, facing this huge wave of anger from its own community and its most important partners, the Flow Foundation finally blinked. They announced they were delaying the network restart. They said they needed to, quote, evaluate feedback and find a solution that everyone could agree on. The community had spoken, and for once, they were heard.
And all this leaves us with a really big fundamental question, one that the entire crypto world is still wrestling with. The whole point of a blockchain, the core promise, is that it's immutable, that the record can't be changed. But if one central group can just decide to hit the rewind button anytime they want, what does that promise of immutability even mean anymore?
Wow. So the whole Flow saga is just this powerful reminder of that tricky balance between taking quick action and sticking to decentralized ideals. Hey, if you want to stay on top of these complex, crazy stories in the crypto world, make sure you like, share, and subscribe to Crypto Explorer 24/7. Thanks for tuning in.
All right, let's talk about Hyperliquid because a big event is right around the corner. We're talking about 1.2 million hype tokens being unlocked. We're going to cut through all the noise and show you exactly what's happening, what it really means for the market, and what you need to be looking out for. Okay, so this is the big question, right? What really happens when over 1 million tokens are suddenly free to be sold? An event like this can definitely shake things up. So let's break down exactly how this specific unlock is structured. All right, first things first, let's look at the official announcement. This isn't just some rumor floating around. The details came straight from Hyperliquid's co-founder on their Discord channel. So this is the magic number everyone's talking about, 1.2 million hype tokens. Now, it's really important to know that these tokens are from Hyperliquid Labs and are specifically set aside for team members. And here's the official schedule they laid out. The tokens were unstaked back on December 28th, and they're going to be distributed to the team on January 6th. And here's the key part. They also said any future distributions will happen on the 6th of each month. That kind of transparency is a big deal. It's designed to give the market a sense of predictability. But this unlock isn't happening in a vacuum. To really get what this means, we have to zoom out and look at the bigger picture, which is Hype's long-term vesting schedule. So take a look at this. The team holds almost a quarter, 23.8% to be exact, of the total 1 billion Hype supply. That is a pretty big slice of the pie, and this whole chunk is controlled by the vesting schedule we're about to dive into. This brings us to a really important concept, linear vesting. Basically, instead of just dumping all the tokens on the market at once, which would be chaotic, this is a gradual release. The tokens unlock slowly over time. It's actually pretty standard practice in crypto to make sure the team's goals are aligned with the long-term health of the project. And this schedule, it really shows some serious long-term thinking. First, the team's tokens had to go through a full 1-year lockup period where they couldn't sell a single one. Now they're just starting this gradual release phase, which stretches all the way into 2027. So with all this information out there, how did the community actually take it? Well, as you can probably guess, opinions were pretty divided. Yeah. Anytime you have a bunch of new tokens about to hit the market, you basically get two main reactions. You have the people who see it as a healthy sign for a growing project, and then you have those who are worried it's going to tank the price. And that is exactly what we saw here. On one hand, you've got investors and community members giving Hyperliquid a high five for being so upfront and providing a clear, predictable schedule. But on the other side of the coin, you have that fear and skepticism creeping in about a potential price dip if the team decides to sell. And this comment right here, pulled from their Discord, really sums up that positive side perfectly. This person is zeroing in on the clarity and, more importantly, that little phrase, distribution, if any. It highlights that these distributions are planned, but not necessarily guaranteed every single month. So when you strip away all the speculation and noise, what this really all boils down to is a single crucial decision for the team members who are getting these tokens.
I mean, this is the million-dollar question, isn't it? What are they actually going to do with their tokens? The answer is going to have a direct impact on Hype's price, at least in the short term, and it all comes down to their individual choices. It's pretty straightforward, really. You've got two roads they can take. If the team holds onto their tokens, it sends a powerful message of confidence in the project's future and helps keep the price stable. But if they decide to sell, that creates immediate selling pressure and could lead to that price dip everyone's worried about. So where do we go from here? Let's break down what you should be keeping an eye on as this all plays out and what it could mean for the future of Hype.
Okay, first off, all eyes are going to be on the trading volume come January 6th. That'll be our first clue to the market's reaction. You should also watch for any follow-up statements from the team. And yeah, the circulating supply is going up, but remember that predictable monthly schedule is designed to help the market absorb these new tokens without any major shocks.
And that really brings us to the final and maybe most important question. How this one day plays out, how the team acts, and how the market responds could very well be a major signal for investor sentiment. It might just set the tone for Hype's momentum for the entire year to come.
Hey, if you got value from this breakdown and it helped you understand what's going on, do me a favor. Make sure to hit that like button, share it with your friends, and subscribe to Crypto Explorer 24/7 for more explainers just like this one. Thanks for watching.
All right, let's dive right into Zcash, or ZEC, because a lot of technical analysts are buzzing right now. They're calling for a huge move. The thinking is a 35% price surge isn't just on the table. It's a move that's already in motion after Zcash cleared a major hurdle. So let's get into what that really means.
So what's the big number everyone's looking at? Well, analysts are pointing to a potential price target of $580. Yeah, that's the headline. But the real story here is how they landed on that number. Let's break down the analysis.
So let's get this straight. We're talking about a potential 35% surge for Zcash. And look, this isn't just some random guess. This is a forecast based on classic technical chart patterns that analysts are saying have now played out, which means a major upward trend has officially been triggered.
Okay, so what kicked this whole thing off? It really all boils down to one single critical number, $470. This price point was a massive barrier for Zcash, and understanding what happened right here is the key to this entire forecast.
Now, to really get this, we got to talk about what a resistance level is. It's basically a price that an asset just can't seem to break through. You can really just think of it like a price ceiling. Time after time, the price climbs up, hits that ceiling, and then gets pushed back down.
And for Zcash, man, 470 was that ceiling. It was super stubborn. The asset had tried and failed to get past this level multiple times. And that's exactly why finally smashing through it, and with some real power, is seen as such an incredibly strong bullish signal. It tells you that the whole mood around the asset has changed.
And this wasn't just some minor detail, the experts were all over this. An analyst named Ali, who was cited in the source material, was super clear about it. He said that $470 was the price to watch, and that breaking it would kick off a strong bull run. And well, that seems to be exactly what the charts are showing.
Okay, so you might be wondering, how does breaking one little price level lead to such a big, specific price target? Well, the answer is actually in the geometry of the charts. Analysts spotted two different and very bullish triangle patterns that were forming. Let's decode what they were seeing. So here you can see the two big patterns they're talking about, side by side. Over on the left, you've got the ascending triangle. See that flat top at the resistance level? That was our $470 line, and the bottom line is rising, which shows buyers were getting more and more aggressive. Then on the right, the symmetrical triangle has two lines squeezing together, which usually signals things are coiling up before a big move. Both of these are spotted on the Zcash chart.
Now remember analyst Ali? His forecast is tied directly to that first pattern, the ascending triangle. He saw that break above 470 as the final piece of the puzzle. With these patterns, you can actually measure the height of the triangle to project a price target. And guess what? In this case, that measurement points straight to that 35% surge.
But wait, there's more. Another analyst, Matthew, he kind of doubles down on this by looking at a shorter time frame. On the 2-hour chart, he spotted a symmetrical triangle and noticed something really important. Zcash was making a series of higher lows. That means even when the price dipped, it never fell as low as the last time. A textbook sign that buyers are stepping in with more confidence each time.
But hey, this is crypto, right? Nothing is ever a sure thing. And that's why analyst Matthew also threw out a really important word of warning. He told traders to be careful of something called a bull trap.
And that really brings us to the million-dollar question for anyone looking at Zach right now. Is this breakout for real, or could it just be a fake out designed to trap buyers who get a little too excited?
So what in the world is a bull trap? Well, it's pretty much exactly what it sounds like. It's a nasty little trick the market can play. The price punches above that key resistance level, and it looks like it's about to shoot for the moon. So all these eager buyers jump in, but then the momentum just dies, and the price comes crashing right back down, trapping everyone who bought at the top. So, how can you try to avoid one of these traps? Well, there are a few key things to watch out for. First, remember that real breakouts are rarely a straight shot up, so you should expect some bumps. But the biggest red flag is low volume. The sources pointed out that trading volume hasn't really surged yet. A real confirmed breakout almost always has a huge spike in volume to back it up. And finally, if the price falls back inside that old triangle pattern, that's a huge sign that the bulls have lost control.
Okay, that was a lot to take in. We've talked about the bullish case, the patterns, and the potential pitfalls. So let's boil this all down to the most important numbers you need to keep your eyes on.
Let's just put this all in one place. That old ceiling, $470, that's now your new floor. Analysts are saying that as long as Zeke stays above that level, the bullish trend is still in play. The target, the big prize based on that triangle, is still sitting up there at $580. Those are the two numbers that define everything right now.
So, here we are. Zcash is standing at a major crossroads. You've got these really strong bullish signs, but it's not 100% confirmed just yet. And that leaves us with a really fascinating question. For anyone watching this market, what's the winning move? Is it patience, to wait for more confirmation, or is it decisiveness, to act on the signals we already have?
Hey, if you got something out of this breakdown and you want to keep up with more explainers just like it, do us a huge favor. Take a second to hit that like and share button, and make sure you subscribe to our channel, Crypto Explore 24/7. We really appreciate the support, and we'll see you in the next one.